A very good morning, friends. So, I hope you're all doing safe as well as healthy. Well, in the previous video, I had given you the insight of how do we determine a tax base of a liability. In this particular video, I'm going to take up the examples which relate to the calculation of a tax base of a liability. Well, I think first of all, let's take a recap that we identified, you can say, two cases of calculating a tax base of a liability. The liabilities which will be paid in the future, settled in the future, we would put across a question that are we going to get a future deduction on settlement? Well, if the answer is no, we're not going to get a deduction, the tax base and the carrying amount is equal. But in a situation where we're going to get a tax deduction, then in that case, the tax base is the carrying amount minus the future deduction. Then there is another kind of liability, which is something like income received in advance, which you are going to not settle, but you're going to provide goods and services against that amount received. In that particular case, the tax base is supposed to be the amount of carrying amount minus the revenue on which there will be no tax in the future. Let's, I think, take up some examples which are given in the standard itself and calculate a tax base by applying these two definitions of a TB of a liability. Unbox 2022 आपने चाहा on a popular demand और वो वापस आ गया है. सर ये क्या है? इसके अंदर आप सीए गोल के अंदर सीए फाउंडेशन या सीए इंटरमीडिएट या सीए फाइनल ग्रुप 1 या फिर सीए फाइनल ग्रुप 2 में प्लस सब्सक्रिप्शन में 1 साल या उससे ऊपर की सब्सक्रिप्शन लेते हैं तो आपको उस पर 6 मंथ्स एक्स्ट्रा मिलेंगे. लेकिन सिर्फ 6 आवर्स बाकी हैं. इस 6 मंथ्स की एक्सटेंशन के लिए केवल 6 घंटे बाकी हैं, क्योंकि आज ये ऑफर रात को 11:59 समाप्त हो जाएगी. तो साथ में आप डिस्काउंट भी पा सकते हैं. जब आप इस ऑफर को सब्सक्राइब करें, अपने गोल के लिए आप प्लान लें, तो मेरा कोड CAKB10 इस्तेमाल कीजिए. आपको 10% इमीडिएट डिस्काउंट भी मिलेगा, यानी 6 मंथ्स एक्स्ट्रा भी और 10% डिस्काउंट भी. तो भाई किस बात का इंतजार कर रहे हैं? आइए, लेट्स क्रैक इट. Well, let's have a look at a few examples which will illustrate the concept of calculating a tax base of a liability. Let's say we've got an accrued expense. Now, there could be two cases in terms of accrued expense. Let's say, for example, you've got an accrued expense in the balance sheet and the income tax people will allow a deduction on a cash basis. Another situation could be that there is an accrued expense in the balance sheet and the income tax people have already allowed a deduction on accrual basis. So let's, I think, take both the two. Now let's go with the first one, that the accrued expense is appearing in the balance sheet and the income tax authorities tell you that once you pay cash, deduction will be allowed. So let's put across a question to ourselves. When you're going to pay the accrued expense, are you going to get a deduction? Yes, we're going to get a deduction. So in that particular case, the tax base is the carrying amount 100 minus the future deduction 100. So we get a tax base equal to 0. And imagine a second situation where you say that the deduction is already been allowed by the income tax authorities on accrual basis. So now when you're going to pay the expense in the future, no deduction will be allowed. And if no deduction will be allowed, the carrying amount in the tax base is going to be same. So in the example, the carrying amount is 100, the tax base is 100. Let's look at the third example. There is an accrued fines and penalty. Now, as far as accrued fines and penalties are concerned, when you're going to pay this amount, you will not get a deduction because it is prohibited under the Income Tax Act. So that means once you're going to pay this amount, no deduction will be allowed. So carrying amount and the tax base is equal. That makes it 100. Similarly, we've got another example. There is a loan repayable. Now, as far as the principal amount of the loan is concerned, when you're going to pay this amount in the future, there will be no deduction. And if there will be no deduction, then in that particular case, the carrying amount and the tax base is same. Interestingly, if you look at the second, third, and fourth example, we can say that there has been no deduction in the future. In the second example, there is no deduction because you've already got a deduction on accrual basis. In the third example, there is no deduction because it is prohibited under the Income Tax Act. In the third case, there is no deduction because it's a capital payment. It's got no tax consequences. So when you put across a question to yourself that will I be getting a future deduction, you can say, when I say no, I'm not going to get a deduction, the reasons could be any one of the three. You've already got a deduction, so no deduction in the future. The deduction is prohibited under the Income Tax Act, or we can say it has got no tax consequences. So in that case, the tax base and the carrying amount is equal. But if you say yes, when you're going to pay the amount, you're going to get a deduction, then of course the tax base is the carrying amount minus the future deduction. Now these are examples which are relating to liabilities. When you go to pay them, you're going to get a deduction. Now let's take another example, which is a case of income received in advance. Now here the calculation of the tax base involves a different calculation. So let's say you receive an income in advance and the income tax authorities tax everything on a cash basis. So what is the amount of revenue on which there will be no tax on the future, the entire 100, because you've already paid a tax on 100. So the amount of revenue on which no taxes will be paid in the future is 100. So tax base is the carrying amount 100 minus the revenue on which there is no tax. That is 100 minus 100, the tax base becomes nil. Correspondingly, let's assume that if you receive an advance and the income tax people don't tax you on a cash basis, then what is the revenue on which there will be no tax in the future? The amount of revenue is 0 on which there will be no tax. The tax base in that case is 100 minus 0 and that will become 100. Indirectly, the tax base and the carrying amount will become same. And naturally, if you are treating an income as income for the coming years, the income tax authority also says it's for the coming years. That means there has been no discrepancy between the accounting and the taxation concept. Remember, the concept of deferred tax implications arises only when you book an income and expense in accounting in a particular year, but you don't book it in the same year in tax. So if the income and expense are recorded in two different years, it would give rise to what we call a temporary difference, and therefore deferred tax consequences would arise. So that's all in this particular video. Thank you for watching. Wait for some more interesting inputs coming on this standard. Bye-bye and take care.